Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Thursday, May 9th, 2024. How you doing? Hope you're having a good day. Hey, I had a really good intraday day trade today that I thought would be a good teaching opportunity to show you about, I keep talking about confluences of signals happening together that they if you have a combination or confluence of signals happening together, it improves the chances of your trade. And this was a really good one. What I used here was a combination of a bullish fair value gap and also a higher low V2. And this is Home Depot on the 5 minute. And let's first start with the bullish fair value gap. So for a bullish fair value gap to form, we need to have a low and then a rally and then a lower low. And then when you have that lower low in place, you need to look to the left to find your first pivot point, pivot high right here. And once that happens, you can see this bar here. Do you see how it closed above this swing high? So what this did was this now put this chart into a bullish uptrend again. And when you have, as soon as you change to a bullish market structure, you need to wait one more bar. It takes 3 bars. Here's bar 1. Bar 2 is the bar that changed the structure to the upside by going above this high. And then bar 3. And so then you take the low of bar 3 and the high of bar 1, and I've highlighted this in blue. So any pullback into this blue area is a legitimate buy. But I like the combinations. And so this big bar down here, yes, that would have been a legitimate buy and it would have worked fine. But I wanted one more combination of a trigger to happen, and that happened here. This is called a higher low V1. I teach these in my private one-on-one courses. I teach this in my weekend review podcast on YouTube. And if you'd like to learn more about them, just go to my YouTube channel under the lessons playlist. Look for V1s and V2s. I have a nice video there that really explains this. But essentially, so 2 things going on here: bullish fair value gap and a higher low V2. So let me kind of give you the points on what a higher low V1 or V2 is. Green line here, green line here. This is called the value zone. For a higher low V1 or V2, we need to close under the value zone. You can see here we did that. You need to rally into the value zone, which we did. Then we need to pull back and have a V1 or a V2. And it's called a higher low V1 or V2 because this low here is higher than this low here. Would you agree? This is a low, but it's higher low from this one here. So this is a V2. A V2 consists of 3 bars: bar 1, bar 2, bar 3. Bar 2 has to go below the low of bar 1 by a quarter ATR, and then bar 3 has to close above bar 1's close, which you can see it did. Bar 1, bar 2 goes below bar 1's low, bar 3 closes above bar 1's close. So this just by itself is a legitimate entry point, this higher low V2. But what I wanted to show you here, which made this trade even better, was not only did we have a higher low V2 in the value zone, but we also had a bullish fair value gap. And again, low, a little bit of a rally, lower low, then we need to change structure to the upside by taking out the first swing high and then creating the gap. So we have the gap happening here, and then we have the higher low V2 here. So when I took this trade, entered here at 344.93, I placed my emergency 2 ATR stop below, and then my end of bar stop on a V2 or a V1 is just a close below halfway of the washout bar. That was right here at 344.64. So I got in at 344.93. So about 29 cents is my end of bar stop. 2 ATR is my maximum emergency stop. And so you can see my risk to reward was very, very good. Now, as far as profit targets go, I just took my entry, added 4 ATR's profit to the upside, which is correct thinking in trading, right? My worst case scenario is a 2 ATR stop, but my profit target is double that, a 4 ATR profit target. Now, I would, if it had just closed below halfway of this washout bar, like right here, if the next bar would have closed here, I simply would have got out with a very, very small loss. This 2 ATR was my absolute worst case scenario. So that's the key with trading. Good asymmetrical risk. You have to have an edge that, if you're going to get long something, that structure or that pattern tends to go up more than it goes down. And if it does go up, you're going to make more than when it goes down. That's the calculus of profitable trading. So again, low, rally, lower low, followed by a market structure change by taking out the swing high, formed a fair value gap, bullish fair value gap. Anywhere in here was legitimate to buy. But as it came back up, I thought, you know what, if it comes back up here, I'll have more confirmation on the trade by having a higher low V2 and the rejection of the bullish fair value gap. And look, it was just off to the races, moved up, a little bit of sideways, and then up, 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 a little bit of a pullback. And then here on this bar here, I hit my 4 ATR stop. So entry at 344.93, out 346.52 within about an hour. Great trade, was never down on the trade. Well, I guess I was here at the bottom of that bar for a second, but it was a very easy trade. But good example, again, of using combinations of indicators lining up at the same time. If you'd like to learn more about my trading, I have a podcast on YouTube. I put it out every Saturday. It's called the Gossett Trading and Mentoring Weekend Review. I talk about all of the trades that I made during the week, when I entered when I entered them, why I entered them, what strategy or what combination of strategies did I enter the trade, and then most importantly, how I manage the trade going forward. And if you'd like to learn more about these trading strategies and how I approach trading, they come out every Saturday. So thank you so much for watching. Hope this was helpful. If you have any comments or questions, put them in the comment section. And if you liked it, I'd appreciate a thumbs up too. All right, everyone. Have a good one. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.